Welcome to the Theo video for Tuesday, January 26th, 2016. I'm Jeff White, and we've seen a pretty nice little market lift off the lows that were set last Wednesday down here for the SPX. That's at 1812. And over the course of just those, 4.5 days, we've seen the SPX lift into tonight's close at 1903. That's some 91 points off of this low of 1812. So by that measure, that's a big lift. That's nearly 5% here into tonight's close, and that's a big rally. But volatility hasn't left the scene yet. We have seen that lately. We saw it yesterday with a sell-off here to the tune of about 1.5% in the SPX, much of which occurred late in the session. We're still getting kind of these overnight gaps on a pretty regular basis. Oil, we're still seeing struggle. Financials have kind of lifted their head a little bit off the floor, but we've still seen them still continue to struggle, and they look like overall they're still kind of just laying down here on the floor, having just set some recent 52 weeks lows in the last few days. And so the market is not at all out of the woods yet, and it's still just far too early to declare a lasting low in the SPX. So what are the chances, you might be wondering, of those lows holding maybe over the course of the next 3 weeks or so? Well, technically, yeah, we've rallied about a third of the way back to where this high was set back here in late December to that low, and this decline represented about 270 points. So to see a 90-point lift off the low, that's about a third of the way back, right? But this move right here was so intense and so deep that we've got a lot of kind of rebuilding to do, not just technically, but also in terms of the overall mood out there and sentiment related to the market. And this little 90-point bounce that we've seen, yeah, it's nice, but if the news flow gets ugly, we could see that erased, and we could see that given back very quickly. We've got an FOMC announcement tomorrow, so there's potential that that's a major market mover. And even if the expectations aren't very high for that, of course, there's always that potential. And so the more space that we can see this market create between where it currently sits and that low, this void right here, that space, is what is going to create the room for a pullback which holds this existing low, again down here at 1812. So you kind of go back to the drawing board. What are the probabilities of holding that low? What are the chances? What if you wanted a mathematical number that might help you sort of quantify the odds of that holding over the course of the next few weeks? Maybe something that might help you sleep a little better. Well, for that, we've got to turn to the option chain. And so you can go over here to the trade tab, and let's pull up just this the February options here, which have 23 days to expiration. And so being that low was at 1800, let's say, I'm sorry, 1812, let's say that we want to kind of just look at this 1800 strike. These are 1800 puts here, and one of the columns that I can set here is to just go over here to probability in the money. And so when I do that, I can get a pretty clear picture here of what the odds are for this particular option finishing in the money at expiration. And so we're seeing that right now, with a little over 3 weeks to go, this 1800 put for the SPX has about a 19% probability of finishing in the money, which means that there's about an 81% chance of us finishing above 1800. So to go a little bit further and kind of to put that a little bit in context, we can jump over here to this Analyze tab and go to Think Back. And if we pull up the SPX here, one of the things that we can kind of spend a little bit of time looking at here is going to the day that the market turned. So that was the 20th. And these are going to be closing values here. But for the February expiration at that particular time, we see that this 1800 put for that particular day had a probability of finishing in the money of about 35% and change. So to put that in perspective, we know that this 35% then, that was just last Wednesday, so less than a week ago, compared to now what we're seeing here in that same exact strike, has been cut almost in half. And so that's definitely something different, and there's certainly no guarantee. But now with 23 days left to expiration, the chances are much slimmer that we're going to finish below that low according to the option pricing. So looking at things in this way can maybe help you get a little bit better feel for the magnitude of the move that maybe the market is pricing in, and it can also kind of help you to better formulate your trades as you see where the expectations lie for the market. And again, this is mathematically based. This is based on option pricing models. And so you can do this, of course, for the SPX. You can do this for any index, in fact, that's optionable, or for any optionable stock. But at this point, we've bounced off of these lows, and the market's attempting to hold here, and that's certainly a positive shift. It still has a lot of ground to make up and a lot more improving to do. But over the course of the next 3 weeks or so, the option pricing the option market is really pricing in basically a pretty slim chance that we're going to finish below that by February expiration. Again, roughly 19% by February expiration below 1800. So the odds of a new low between now and then are kind of fading. And we need to see some fresh recovery highs. We need to see some improvement in here in terms of the price action nudging past kind of Friday's high. And again, that's around 1908. That would add to the space between where price sits and that low down there at 1812. And that's going to provide even a little bit further breathing room for stocks in the short term. So in the next couple of days, be watching this 1908 level to see if we can produce a little bit of a continuation move here to the upside. But all in all, still a touch and go situation, still a market that's by no stretch at ease or comfortable, and there's still a lot of uncertainty out there, and traders are still responding very quickly to the price action and the news flow, and so that's going to keep things very tricky in the near term. But we know that the odds here of these lows sticking for the next few weeks are diminished, or improving, I should say. The odds of a new low being created are diminishing, and that's something that we'll continue to keep an eye on. So thank you for stopping by TheoTrade. Be sure to join us in the live chat room every day where we discuss the markets. We talk about trades and positions. There's Q&A, there's coaching. Everything is archived, and it's available to you 24/7, so it's great. We also have the monthly class for January that's coming up on Wednesday evening. That's at 8 p.m. Eastern Time. So that's tomorrow night with Don Kaufman, and he'll be spending some time discussing how you can survive the extreme volatility in the markets. Your membership at TheoTrade, it gets you access to everything that we offer. There's no upsells. And it's still free for the remainder of January. There's just a few days left, but stop on by, and we hope that you can join us. Thanks again. Have a wonderful Wednesday.